argue we are facing a tipping point. Today, if we look at factors from a scientific standpoint, there is no debate anymore that human beings are having a major influence on climate. If we look at the regulatory environment, we see new trends pushing companies to invest according to more sustainable practice. If we look at the corporate world, recently we had more than 180 CEOs in the US redefining the purpose of a company and making the statement that shareholder value as a unique objective is no longer good enough. You need to look at stakeholders, you need to look also at your employees. Even central banks are moving in that direction. Recently, Christine Lagarde laid out her commitment for more sustainable practice for that. And all of these points together are creating a wave of change, large amount of changes, pushing more sustainable practice into the investment world. As a bank, when we analyze financial opportunities, we now no longer take only the traditional factors into account, cash flow, balance sheet, profitability, but we look also at new factors. We have new data. We look at the impact of a company from an environmental standpoint, from a social standpoint, and from a governance standpoint. These are additional risk factors that help us to qualify the opportunities that we have. As a client, you can use this data and you can align your portfolio with your value. So if you want to contribute to climate change and the reduction of the carbon footprint, you know where to put your money, you know which equity to select. So taking ESG factor into account is definitely a good risk management tool. You can analyze different aspects of the company, not only hard factors like profitability, balance sheet and cash flow. And one could argue that a company which is acting according to sustainable practice will have less legal risk. It will be in a much better capacity to attract talent and to attract the next generation that don't necessarily want to work for a company with questionable practice. So change is definitely happening. The topic is becoming a mainstream topic. It's mainly about education and information. Many of our clients were not aware that they could do so. And now that this is becoming much more present in the press, we get more and more demand, especially from women, also from the client of the next generation, I would argue, on ultra high net worth clients. The impact of investing according to ESG on performance has been vastly debated in the financial communities. We had a ton of study to look at the factor. Now, in 80% of the cases, we can say with certainty that investing with ESG factors doesn't have a negative impact on your portfolio. To the contrary, in some cases, it has a positive impact. So I think the real important element to keep in mind is you can align your portfolio with your values, keeping good performances. The market is under constant development. Sustainable practice or sustainable investing used to be a bit of a feel-good factor, but this is no longer the case. It's definitely a major risk mitigation factor when you select the company you want to invest in. If I look into the future, I think sustainable practice and sustainable elements taken into account when you invest will become the norm. The choice will no longer be do you want to invest sustainable or not, but will be much more in which thematic do you want to go. Do you want to invest to preserve the ocean? Do you want to invest according to sustainable practice in education? Julius Baer has recently signed the UN Principle for Responsible Banking. This is a very strong commitment that we took. We have agreed to have a positive impact according to the UN Sustainable Development Goals and according to the objective of the Climate Paris Agreement. We will be measured, we will publish our action, and we will report frequently.